Your heirs can be millionaires about 3 weeks after you die. In this episode, I'm going to address the question, how long does it take to get insurance proceeds? And so put on your seatbelt. You're going to be blown away with some insights that you may have never had before. But get ready. I will answer that question and expand upon your opportunities. So my name's Doug Andrew, and I've been a financial strategist and retirement planning specialist for more than 45 years. And so I've helped many people optimize their financial assets, minimize taxes, and empower what I call their authentic wealth. And I've also held not only securities licenses and insurance licenses, but I've helped a lot of people plan for their future by using life insurance instruments, primarily for living benefits. But many people pass away, sometimes sooner than later, because the reality is nobody's going to get out of here alive. I mean, out of this life, right? And so when death occurs, when you own life insurance, I get asked questions all the time on this channel. How long does it take to get the life insurance benefit, the proceeds, the death benefit, after somebody passes away? Or how long will it take my wife or my children? And so the quick answer is usually about 3 weeks if there's no contestability going on and if you file all the paperwork. So I'm going to share with you some ideas why many people use life insurance to actually endow their children, their spouse, or a charity with millions of dollars of tax-free proceeds. And my own family, my children, they'll be endowed with millions within about 3 weeks after I die. So when people say, well, Doug, what do you mean by there's the dumb way, smart way, and sad way to access money out of a life insurance policy? Well, I say, well, the sad way is obvious. It's one heck of a return, but I wouldn't recommend it. But I sometimes tease my wife and say, honey, when she sees me going away to Alaska fishing and she maybe is afraid that a grizzly bear is going to attack me and eat me or something, I go, honey, do me a favor. When I die, if I get eaten by a grizzly bear, would you promise me to sort of look down and look sad at my funeral? She rolls her eye. I says, because you're going to be loaded with cash in about 3 weeks. So let me explain the process to file a death claim, and I'm going to give you a couple of other insights on why you may use more of your insurance capacity. So when a death occurs, if you are the one claiming the life insurance death benefit, you need to fill out a claim form, and so you're going to need a lot of information about the deceased, social security numbers and what have you. And when you send in the claim form, you need to accompany that with a certified death certificate. And so I often recommend to families, because I've been there many times, when they passed away or a few hours after or a day or two, hey, this is your most inexpensive time to order death certificates. Because a lot of people say, oh, I only need 2 or 3 of them. No, I say get a dozen at least. You will be shocked how many times you have to give a bank or a financial institution or somebody a certified copy, and it's more expensive to order them later from the state or the county, wherever you're getting the death certificate. So get a couple of dozen copies if you really have a lot of claims and accounts that you're going to go and prove that you need to take over and change the ownership of this account at the institution. So you send in that certified death certificate and you need to surrender or give them the insurance policy. Now, a lot of people can't locate it, no problem. You fill out a 1-page affidavit that's the policy has been lost or destroyed, and you can put that in. Now, I recommend also, if you have an obituary, that you put in a copy of the obituary and so forth. Now, if everything's in order, once they have that, it usually only takes 2 or 3 weeks to pay the death claim, and they may give you a check if you ask for it in one lump sum, or sometimes people ask for it to be left with the insurance company earning interest, because did you know the insurance company will usually pay you interest on the death benefit? If it was $1 million, they'll be paying you interest on $1 million from the date of death until they give you the money, or a checkbook where you can write out checks with $1 million bank account, so to speak. So they will credit you interest, and then they will settle that with you in usually 2 or 3 weeks, unless the policy was taken out in less than 2 years before, because most insurance companies have a 2-year contestability clause where they could contest if you lied on the application about your health or something like that. Or, for example, I had a client one time that he took out a sizable insurance policy, and when I was filling out the application, he was sort of coughing and says, "Golly, I've got this nasty cough, it won't go away." Well, the policy was approved, and the next day, he was diagnosed in 4th stage of Hodgkin's disease cancer. Now, he lived about 13 months, but it was within that 2-year period. And they could not believe, the underwriters, the insurance company, that he didn't know he had a terminal illness when he applied for the life insurance. So they can contest it. But they asked for all the doctor's records and everything, and they realized, golly, he didn't know. And so they promptly paid the life insurance death benefit. So that's called the contestability period. After that period expires, no, they can't contest it, even if you lied. If you misstated your age or something like that, they may adjust the amount or deduct the premium you should have been paying. But pretty much it's over. In fact, usually suicide clauses expire within 1 to 2 years, that even if somebody takes their own life, the life insurance will pay after that expires. Now, let me give you a few insights. Did you know that life insurance is one of the very few financial instruments that when a death benefit is paid out, I don't care if it's 10,000, 100,000, a million, 10 million, I have delivered many life insurance death benefits to widows, widowers, families, children, charities, Boy Scouts of America, whoever they named as the beneficiary. Here's 2 big benefits of life insurance proceeds. When they are paid out to the named beneficiary, they are totally income tax free. Now, in a family, it could cause the estate to go over maybe the estate tax limit. They could make the estate tax be due and payable on life insurance proceeds, but life insurance is always income tax free. That is protected under Section 101A of the Internal Revenue Code. It's been a sacred cow for over 107 years at the recording of this episode, okay? Because you are providing the wherewithal to be self-reliant to your widow, the orphans that you're leaving behind, and so the government realizes this is saving them money. Why would they tax something that would end up causing them to have to provide more welfare benefits or whatever? So life insurance is tax-free. Hello? Well, not only that, the money, the cash value inside the insurance policy is tax-free if you need it for living benefits, for retirement benefits. When I structure a life insurance policy, I do the opposite of what most Americans do. Most Americans try to get the most insurance for the least premium. No, I get the least amount of insurance the IRS will let me get away with, and I put it the most premium that the IRS allows as fast as they allow, and it turns into a tax-free cash cow. So this is where I accumulate my retirement and knocks the socks off of IRAs or 401ks. I've averaged between 7 to 10% tax-free rates of return. Every time I put in, let's say, 100,000, the 100,000 doubles to 200, 200 doubles to 400 about every 7 to 10 years. If you do the math, that will knock the socks off of an IRA or 401k, which is taxable at the end of the day. So let me give you a secret. When you take out life insurance, okay, if you're taking it out on your life, you're the insured. You usually are the owner, but you don't have to be. There's a beneficiary. And when you take out life insurance, you must prove to the insurance company underwriter that the beneficiary you're naming will suffer an economic loss by virtue of your death. Okay, you just can't take out a bunch of life insurance for nothing to make somebody rich. You must prove that they will be dependent. They will suffer economically. It's called an insurable interest. Most people underutilize their insurance capacity. When I was 30 years old, my wife and I had 6 children. If I was making 100 grand a year, I can get insurance for up to 30 times my income. No more, okay? So I could have qualified for $3 million. That if I died, my wife would have $3 million to have the kids get their music lessons and do things and go to college that I would have provided had I stayed around. The older you are, when you're 60, you maybe only can have 6 to 9 times your income or 1 times your net worth. Well, a lot of people say, I don't need insurance anymore because if I die, there's just my spouse and there's enough money. I go, quit looking at what it is. Look at what it does. So for example, if I have several $1 million of capacity because of my net worth or my income, when I was 50 years old, I had a serious talk with my kids. I said, kids, I have news for you. Your dad's not immortal. What? Someday I'm going to die. Now, if I have capacity I'm not using, kids, I want you to buy a policy on me for $500,000 or $1 million. Do the math. $1,000 a month into $1 million life insurance policy on me, my kids, or me on my parents. Do you know I've owned life insurance on my father? I couldn't on my mother. She had heart attacks early in life. On my father-in-law, my mother-in-law. Do the math. What that allows you to do, if a child put $1,000 a month into $1 million policy, it grows tax-free they can use for retirement. But whenever I die, they're automatic millionaires in about 3 weeks. Reverse engineer the math. An IRA or 401k would have to be earning 12, 13, 14% for 30, 40 years to generate the same amount of money tax-free. An IRA or 401k would have to have $1.5 million in it to net people $1 million after paying tax. Think about it. Your kids could be millionaires in about 3 weeks after you pass away. So as I've mentioned, I've been a financial strategist for more than 45 years. I've been very blessed to have written 11 books thus far. One became a New York Times, Wall Street Journal #1 bestseller. My most recent best-selling book is in its 6th printing. I want to gift a copy of this to you free. It's called The Laser Fund, and it talks about what I've been sharing with you, how you can maximum fund an insurance contract for living benefits, tax-free, or when you ultimately pass away. The Laser Fund, it stands for Liquid Assets Safely Earning Returns. It's actually 2 books in one. This white covered side is about 200 pages, 14 chapters of all kinds of charts, graphs, and explanations. If you're more right brain, you flip the book over and you read this one. This one is 100 pages, 12 chapters with 62 chicken soup for the financial soul stories. So if you want to use your whole brain, read both books. But I would love to gift you a copy. I'll pay for the book. Go to Laser Fund, L-A-S-E-R, laserfund.com. You contribute a nominal amount towards the shipping and handling. I'll cover the rest of that, and I'll cover the book, the cost of the book. I want to empower you with this knowledge and information that is so critical.